and talk about, you know, anything that they want to talk about. Is there anything interesting you've seen lately? Just, you know, take the floor. Oh, quiet, aren't we?
Mike, I'm gonna take a presentation on behalf of Gaurav. I'm gonna share my screen. So just hang on. Okay, can you guys see the screen where it says Zoom open 6 p.m.?
Yep.
Okay, cool. So just to give it a perspective, community announcements is next, but we open the Zoom, and the panel discussion will be immediately after community announcements. We hope to end latest by 8 o'clock. Right? Bitcoin Bay mission, we are building the world's blockchain ecosystem starting here in Toronto. For those of you who are hearing about Bitcoin Bay the first time, Bitcoin Bay is where your blockchain journey begins. We are the largest and longest running community and blockchain consultancy. Our mission is to grow the blockchain ecosystem globally, beginning from our home base so that everyone benefits from it. We've got our channels on YouTube. If anyone goes to Google, type Bitcoin Bay YouTube, you will have huge content. Thanks to our sponsor today, Louis B. At 279 Spadina. If anybody is interested in getting Bitcoin for cash and cash for Bitcoin, then just head over to Louis B, and she is the person to go to. Now, how can we help as a company? We are into, as you can see, product development, building decentralized applications, trading strategies, ideation assessment, investor relations, and merchant adoption. Who are we? Those of you who've been here before, you've met a lot of us. I am Allwyn D'Souza, co-founder and head of research. Jerry's here. Leo will join in and out. Gaurav's here, and Antoine's also here. So if any of you need anything at all, just ping us directly here, or you can email us. And we go over to community announcements. So any one of you has anything that you want to say about your endeavors in the blockchain space, or anything that you guys are up to, this is the time to speak. You guys can still hear me, right? Okay, cool.
Yep.
Okay. So we will have time even after, towards the end, if anyone wants to speak. But I guess right now, then I'm just gonna move on.
So
today,
the other thing, Allwyn, is I seem to think everybody should be aware of what we have for our social media channels. You can follow us on YouTube, Instagram, meetup.com. We have multiple meetups in different cities, from Mumbai, Dubai, Montreal, Toronto, Kitchener-Waterloo, Vancouver. Just reach out to us and join our communities. We also have community chat that's available. So with our community chat, we are on Signal, WhatsApp, and Telegram. So feel free to join. Ask us for the links to join our chats, and we'll be happy to have you join our community.
That said, does anybody have anything to say at all before we move on to today's presentation? Anybody, any announcements, any introductions, anything at all?
May I ask the question, or it should be better at the end, about Louis B?
Oh, sure, please, go ahead.
Okay, if I remember correctly, like when I joined this meeting first time, you were telling that Louis is charging around 2% for cash operations, but now it's around 5%. Is it normal? Like it's an average? Is it too high? Is it too low?
Okay, so quickly, Without KYC, from what I know, it's minimum 500, maximum 9999. This is usually the case in Toronto. I don't know about other cities, but this is where the threshold is. Usually it's 3.5%, but if you go anywhere at any point in time, depending on various scenarios for cash, it can vary even up to 10%. It all depends on demand, supply, and price. So we at Bitcoin Bay are not into the buying and selling, and Louis being our sponsor is definitely what we recommend as a go-to. There are other places in Toronto that we've dealt with, Mark Sinclair and CoinShack, and we are glad that you're making the attempt to get in. But I know of a time when the prices fell last week where no one was able to give supply and cash. So then you were left with options of going using other options. So we had an entire presentation and meetup on that.
Okay.
So to answer your question specifically, yes, prices can vary and it's all dependent on them.
Are there any places in Kitchener-Waterloo area?
Mike may be able to give me that. I don't know. Mike, is there anybody you know? Are you specifically saying for cash?
Yes, for cash.
I don't
This is
know.
what you advised, right?
Yeah. So what I seem to think is that if we can talk offline here, we can talk with Louis. Maybe there is something that we can work out here in Kitchener-Waterloo with Louis. We can talk offline. So message out to me again. I know we talked a little bit a while ago of trying to find somebody in the Waterloo region. That's something that we're working towards to make it available to other parts of our community. I think we're pretty blessed in the GTA, but once you get a little bit out into Kitchener-Waterloo, we don't have the infrastructure built up there. So, yeah.
Okay, so if there's nobody with community announcements, Mike, is my screen still shared?
Your screen is not shared, Allwyn.
Okay, I'm going to share it then. Just want to make sure everybody can see. Yeah. So community announcements, anybody? I guess we can move on. So today is the main presentation. We have Mike free as a moderator. Me, and I think Jason's here now, and Arden, right, are going to be on the panel. So I will pass this on now to you, Mike. Take over. I'll stop sharing and come back to share when you pass it to me for my bit of basics and stuff. So over to you, Mike.
All right. So the basic premise of this meetup, we're going to get everybody introduced to mining. We have two great people from two great organizations here to tell everybody what it takes to do it on a large scale. And we're going to talk a little bit about how they got started and how you can get started with it as well. And we're going to talk about some other things as well as open it up to people that are looking to get involved, whether you're in Canada, the United States, or anywhere else in the world. So the first thing I'm going to do is, I know Jason just joined the Zoom call here. Jason is from Hut 8 Mining Corporation. We're going to have him tell us a little bit about his organization and what they do. So Jason, are you there?
Yep, here. Hello. How's it going, everyone? So I guess I'll start with just a quick overview of Hut 8. I just joined the organization in February of this year, so pretty new to the organization, but as you'll hear, a lot of our leadership team is very new. So Hut 8 started in 2017 with a mining operation out here in Alberta, and then expanded into another site. And that infrastructure is currently what's really being run right now. So that's 109 megawatts in two locations in Alberta. One is an area called Drumheller. The other one is Medicine Hat, if anyone's familiar with kind of rural Alberta. And yeah, I mean, basically for that whole time, it's been a Bitcoin mining operation. And we went through a few iterations of hardware back then, but largely we were running Bitfury equipment. And it's only been in the last year that we transitioned to micro BT. And so now they have a kind of some Bitfury equipment and some micro BT equipment. But largely, Hut 8 is a Bitcoin mining operation, 109 megawatts. It's publicly traded on the Toronto Stock Exchange, as well as we've publicly announced we are pursuing listing on the NASDAQ as well. And yeah, I mean, that's kind of high level, but it's one of the original publicly traded mining companies. To date, I think it's mined close to 18,000 Bitcoin historically, has a balance sheet of 3,500 Bitcoin. And we've also announced some expansion plans. So we are expanding an additional 100 megawatts over the next 6 to 9 months.
Perfect.
Any questions on that so far, or?
Well, let's take it over to, do we have Steve Morgan in the chat right now? If not, we can move on to Arden here. We can have Arden introduce themselves and take it away, Arden, if you're still there.
Sure. Yeah, I'm still here. Can you see me okay?
Perfectly.
Okay, great. So nice to meet you all. Jason, we're in the same neck of the woods. I'm in Calgary. Jason, are you in Calgary perchance?
Yes, I am. Yep.
Oh, okay, yeah. Okay, good. We'll have to get together for a coffee or something. Anyway, so I'm the president of CryptoCache Mining. I'm located physically in Calgary, but the company is out of Pittsburgh, and there's various reasons for that. Our CEO is located in Okotoks, just south of Calgary. And the genesis of the company was, I'm the chief commercial officer of CEGEN Environmental Group, and CryptoCache Mining is a division of that company. And so one of the things that we do over at CEGEN are modular-based data centers, built structurally very sound, soundproof, highly efficient. And we've taken those designs and modified them for the crypto mining market. So what we offer are really high density pods. They can be anywhere from 200 square feet at a minimum all the way up to as big as you want. They're based on modular design techniques and construction techniques based on oil and gas skids. So skids have been built for decades in the oil and gas industry. So this is taking that very strong structural foundation and adapting them to the crypto mining market. So we're not crypto miners per se. We just provide the facilities that crypto miners come into. So Hut 8 would be a client, a potential client, for example, to build some of the facilities. And so we're doing this. We have interest from all over the world, Asia, South America, Central America, all over the United States and Europe in particular, Western Europe. And as everybody's experiencing on this call, the whole crypto mining market is really robust. Lots of activity going on. And particularly with the Elon Musk announcement a couple of weeks ago. So the green power has always been part of our offering as well. So in addition to the manufacturing, the engineering and design and manufacturing of the actual facilities, we also have access to many megawatts of clean power, green power, at sites that are pre-vetted throughout North America. So what we do is we bring all the parties together and we provide a one-stop shop for crypto miners to establish profitable operations at very low power rates.
Perfect. Thank you so much for that. So what I seem to think is the first thing is, I know it's kind of a rudimentary question. Why don't you guys kind of both tell us a little bit of what you mine and what mining is? So are you specifically Bitcoin centered, or do you have other mining operations? So we'll give it to Jason first, and then we'll take it on to Arden second. How's that sound?
Sounds good. So whenever, I think this question gets asked a lot, like what is mining? And I think there's lots of different layers to go into it. Like mining is a very interesting piece of the blockchain ecosystem. And it's like a very, very technical thing. But generally it's a piece of equipment that you dedicate to a blockchain that performs a certain function, and then you are compensated in the underlying currency or asset that the blockchain that you're kind of contributing your compute power to. So I think that's kind of like, I know it's probably not satisfying, but like leaving it kind of like at high level kind of allows us to get on the same page so we can kind of get into some more nuances. But so largely Hut 8 has been mining Bitcoin. So we've had specialized machines, typically called ASICs, that are designed specifically for mining Bitcoin. That's really the only thing it does. And that has been the strategy up until, let's say, March of this year. And at which point we kind of purchased some NVIDIA graphics cards, and we'll be deploying a small fleet of GPU mining. And so GPU mining is more flexible and can mine other blockchain assets like Ethereum or one of the companies I was involved with earlier on, Aon, out of Toronto there. So it's, but Hut 8 in general has been mining Bitcoin up until this point, and now we have a small deployment of around 2 megawatts by the end of the summer that we can use for GPUs, which are more flexible.
Okay, Arden, would you like to take it away there?
Yeah, so my answer is quite simple. So it really doesn't matter what cryptocurrency is being mined in our facilities. It doesn't matter at all. We just provide the facilities, make sure they're infrastructurally sound, and it really takes the design to the next stage. So heretofore, most crypto miners have used modified CEGENs that you see on the back of trucks and ships and things like that. So we just take it up to a new level where we have very efficient airflows, very efficient electricity usage, etc. So what's mined within the facilities, it doesn't really matter to us, but Bitcoin is typically the one that attracts the most interest.
Okay, so another thing that just came to mind there with Jason, I noticed that you went from mostly Bitcoin mining into GPU mining. I know that Bitcoin is mined on the SHA-256 algorithm. Is there a reason why you're not looking at other sort of ASICs as well that you could be mining on for the foreseeable future? Or why would you choose maybe GPU versus other types of ASICs, like say maybe Script?
So it's a very small deployment of GPUs. As I said, we're 109 megawatts overall, and so we're dedicating 2 of those to GPUs. So I mean, I think we are evaluating lots of different opportunities, especially with some of the new technologies that we can utilize to just basically mine whatever network and then get paid out in Bitcoin. Through one of our partner pools, Luxar, they have the way they do it is through their Catalyst project. So you can mine Sia coin, a bunch of different ASIC coins or GPUs, and still get paid out in Bitcoin. So I think you're going to start hearing more narrative about Hut 8's strategy is that we are a company that specializes in transferring electricity into digital assets. And really, one thing I'm looking at is just what's the most effective way to, if we want Bitcoin at the end of the day, to get Bitcoin. And that could be, buying script miners and then accumulating underlying asset and flipping it for something else. But because we are a publicly traded company, we have to have a pretty clear mandate and strategy for what kind of equipment we purchase. It's all board approved. So we're definitely not able to move super quickly and change a strategy as fast as like a pub or a private kind of miner would. But it's a good question, and we certainly are looking at the best, most cost-effective way to basically get the highest value digital asset as possible.
Okay, so that makes sense there. So I have another question for both of you. So in terms of the way people have been talking about proof of work mining, what are your criteria when you choose a place to mine from? So maybe we can have Arden take that question, and then we can go off to Jason as well. So like what's the criteria? Say I want to mine Bitcoin in a location or any other cryptocurrency. What is the criteria you look for to say, 2 thumbs up? What do we do?
Yeah, so it's a good question. What we look for are a couple things. The first is the access to stable and low cost energy. Okay, so that's a no-brainer, right? But there's all sorts of nuances within that. But stable, low cost access to energy, and so there's lots of places in North America that can provide that. There's West Texas, Alberta, of course, as Hut 8 is doing. It's there, but it's tricky because there's regulation in place, there's property owners in place, there's legacy businesses that they're not quite ready to get into the crypto mining market. It's too risky. They simply don't understand it. So there's a lot of education that has to go on if you find a good location. So provided that they want to get involved, they want to convert, let's say, instead of flaring gas, they want to turn that into low-cost electricity. They have a pad, like a cement pad available. Maybe it's 1 or 2 acres. And so you crush that all into the algorithm, and the economics make sense in that case. And we are finding those, and I'm sure Jason is finding those as well, but they're tricky to find. We also find that crypto miners are looking for green power, so access to green power. So that's part of their ESG goals. So that's part of the criteria. Climate. So Alberta's great because it's cold most of the year. I mean, it was snowing here on Jason and I maybe 3 weeks ago. It's going to be 32 tomorrow. So, but it's primarily cold in Alberta. And so your electricity required to cool the facility is reduced.
Perfect. So I seem to think that there is a little bit of an advantage, I think, when you look at the north of Canada in terms of northern Quebec, Ontario, Manitoba, even all that, where there's a lot of, say, mining towns. I like old mining towns, actually.
Yeah.
That's any part of it is that you need the electrical hookups, you need all that, facilities to be there in the first place. And then also all you need to do is show up with a good internet connection and maybe connect some, right? So that's interesting. I remember Facebook kind of choosing some places in Sweden because of the open air cooling and all the other advantages on that as well. So that's awesome. That's definitely a way that number one, you probably want to stay green, but also cut down your costs. Like, if you run a data center in the middle of, the desert in Nevada, you've got to pay a lot more.
Right.
Just think about a hockey rink in the middle down there. Let's say that.
That's right.
So, so awesome. So now, were any of you guys involved in any sort of, hobby type mining before you started?
I wasn't. So I'm not sure about Jason, but I wasn't. Yeah.
Yes. So prior to Hut 8, I ran a 7.5 megawatt mining facility in New Mexico. And then prior to that, I was part of the Aeon blockchain founding team, which I guess you would kind of count as like a bit of a hobbyist sort of mining. I started out with like a single GPU doing some testing and then scaled up, and then with Aeon actually like managing and running a mining network and providing support to a variety of different miners that are getting into mining for the first time, or some of these like small industrial sized miners. But yeah, and of course I have a tale not similar to others where in 2011, 2010, mining Bitcoin with my laptop, and and then promptly losing the private key and have no idea where it's stored or even how much I mined or anything like that. So, you know, everyone has those stories. But yeah, and that was one of the things that was really what I love about mining is that it's just like the whole model of distributed computation, and you can kind of set things up at any scale that you want, whether it's like your laptop or desktop at home, or you can like kind of get into more of these like 6, 8, 10 card rigs or ASICs and kind of scale up. It's really interesting how you can kind of start at whatever scale that makes sense to you.
No, perfect. So I got another question for you guys. I know it's a very big thing. I know you guys aren't very focused on, say, Ethereum mining right now because it's mostly GPU based. But where do you see yourselves fitting in terms of, in a lot of ways, how proof of work is also being kind of supplanted by proof of stake? I'm looking at Cardano, Elrond. I'm looking at a lot of other projects. So where do you guys see that going? Are you getting involved in that? Tell us more.
Yeah, I can start with that, Mike. So we, we're dabbling around on that a little bit, but it's not really our focus because, we're building the infrastructure, right? So we're just focused on building low cost, very high quality, quick to market infrastructure. So it's taking existing mining buildings, facilities, and just taking it to the next level. But it's being done at a data center sophistication point, but at a price that makes sense to the crypto mining market, to companies like Hut 8. So yeah, the proof, all that stuff behind it, we're not as focused on that side.
Perfect. That's kind of what I was looking for, because it seems like it's a new model of data center. So that's obviously it's new class of what people are going for, because I seem to think in a lot of ways, when you look at the data center market, everything migrating towards larger cloud providers, and then you guys are actually providing something that's a little bit different in terms of that new void that has to be filled and what we're going to do with that infrastructure.
Right.
So I seem to think that the other question I have, let's go talk about some advice for beginners, and then we're going to have Allwyn take a presentation and show what people can do to get up and running and mining. Maybe you guys can provide some advice after that, but also we'll open it up to anybody else who wants to chat with us in this meetup. So how does that sound, everybody?
That's
Good.
cool.
Nice.
Jason, there's a couple of questions that I have here, which I'm going to ask you on behalf of Linda. Who does Hut 8 look at as competitors, and why do investors invest in Hut 8?
Okay. Well, it's an interesting question. I'll address the first one about who are the competitors. So I think it depends on like what are you competing for? Because kind of the interesting thing about Bitcoin mining, for instance, is it's proportional, right? So like more miners come on, then each miner earns slightly less, but then you kind of fight over at scale, you fight over kind of who has the best operation, who is the lowest cost, who has the most uptime, and then what are people doing with their holdings. So, I mean, the easiest way to answer that question is the other publicly traded North American Bitcoin miners. So you have Argo, Hive, Riot, Marathon. Those are kind of a group of also publicly traded crypto miners, and they're all slightly different. And not only just based on like where they're located, but then also like Hive has been GPU mining as well for a while, where the other ones are kind of, including Hut 8, we're more focused on Bitcoin. And so I think the original value proposition of why companies like Hut 8 and are publicly traded is to give the investor exposure to Bitcoin in a very kind of conventional way that fits within their portfolio management, as well as so not only are you buying, you can buy kind of stock in these companies that are crypto miners. You kind of, it's a belief that their value will increase along with the underlying asset that they're mining, and that it's better managed, better secured than, say, you were to do it on your own, or that you're trusting that these companies are continuing to innovate to add value besides just holding an underlying crypto asset. So yeah, and I'm sure that there's much more better information on the web. The whole industry is starting to be more analysts are writing about it, more people are evaluating these different companies, so they certainly have much more kind of, I guess, opinions and how to look at holding these crypto mining stocks.
Jason, thank you. Mike, with your permission, I'm going to go on and ask a few more questions to Jason and Arden before I take on my part of the presentation. So Arden, the question to you would be, is there a minimum investment if we are bringing investors to you based on your model? Would you have some minimum amount that one should look at, or what would be, if Bitcoin Bay or anybody here is interested in bringing business over to you, other than Hut and the known companies, what should we look at?
Yeah, that's a good question. So there's not really a minimum per se, but to build like a 200 square foot mining facility with the associated cooling and infrastructure, it's not something that a couple of buddies around the block could do, right? It's fairly expensive, but if you're a bit mining operation, it's a cost, and it's cost effective for that level, that scale. So it's not really designed for individuals to come in. We're more focused on corporations, bit mining corporations that would come in and fund these larger operations, because the economics have to make sense, right, Allwyn?
Right.
So
right. I get it. I get it. And so yeah, it makes sense. Just wondering if there are people who might just want to foray into this with your advisory or something, if there was a minimum, but we can discuss that later on a one-on-one, and that's not an issue. Yeah.
Sure.
But
yeah, absolutely. Yeah.
Thank you. The next question from Antoine was, how does it feel, Jason, to have mined more than 90% of the BTC you'll ever mine? Oh wow, that's I guess something. Well, okay. And the other questions are, why should people buy stocks of Hut 8 in favor of BTC? I think, Jason, that's also been answered by you, right? I mean, like you said, it's an exposure to options that are there. But if there's anything additional that you want to add, do let us know. Linda's also, sorry, Jason, is there anything you would like to add?
Well, I guess I'll just kind of maybe follow up on the why would someone buy Hut. I think it really depends on the individual's appetite and familiarity with crypto, and holding that, and how they manage their own portfolio. I think it's really up to the individual. So it's just like going out and buying and holding Bitcoin isn't for everybody. I think it's really dependent on individual strategy and what you're comfortable with, what risk you're bearing. And then the first question, how does it feel to have mined 90% of Bitcoin? I don't know. Good, I guess. I think it's not necessarily about the number of Bitcoin that we mine. Obviously, if we would know the current value of Bitcoin, we would have been expanding like crazy and mining everything we want. But we also have to bear in mind the economics and what's happening in the future. And that's also why we're a long-term holder as much as possible, which is certainly one of the most interesting things about being a Bitcoin miner, where you're basically injecting the company with capital expense to get started, but then you're paying for your operation with Bitcoin, and the more you can hold it, like I know, especially a year ago, a lot of Bitcoin miners would have to sell 100% of what they mine just to cover their electricity bill, and they weren't able to hold anything. But those that did were able to survive the bear market have now, at least, they hopefully have really strengthened their balance sheet and was able to survive it. So they have an underlying asset that's going to appreciate in value, which helps a lot.
Can I ask a follow-up question? Yeah, so you said that holding Bitcoin is very important if you believe in long-term value, and you don't want to just mine it to sell it. So my question is, do you feel that there are diminishing returns in continuing to mine Bitcoin versus holding what you have?
I mean, I'm not necessarily diminishing returns for mining, because the economics are still strong and still support the case for growth. There are some tricky issues in terms of the constraints of hardware right now and the cost of mining hardware. Like that's really increased dramatically over the last year. So I think it's a balance. Like I think it's always important to hold what we can, but then, you know, it's a cash flow, it's an income, right? So we have to make good decisions about what hardware we buy, maintain our operational excellence to lower the cost of Bitcoin acquisition. Because even if, I mean, that's basically what mining is about too. It's over a certain time horizon, your average cost for Bitcoin is much lower than being able to purchase it on the market. And so that's basically the fundamental building blocks of what makes mining profitable or not profitable.
Thank you, Jason. I'm going to continue with the questions. Mike, I do understand you wanted me to take over, but I'm there for the teams all the time. We are knowing everybody, but the precious time of Arden and Jason and the enthusiasm of everybody, I just want to continue asking the questions. So the next question from Linda to Arden is Arden looking at public markets in the future, given how capital intensive his business is? Arden?
Okay, thanks, Allwyn. Thanks for the question. So I'll just answer this, and then I've got to run to another engagement. But right now, we're not looking at the capital markets. No, we're doing all this privately through existing cash flow and forecasted growth. So, and we're working very closely with our suppliers and our customers to manage that whole relationship. So we don't have to go public and raise money or anything like that at this time. But in the future, who knows? But right now, we don't need to do that. So I just got to go. And I want to thank you, Allwyn. I want to thank you, Mike. Great to meet you, Jason. Fantastic group here. We're happy to get in touch again. If you need anything, just let me know. Okay. Thank you for the opportunity.
Thank you, Arden. Thank you.
Right. Okay, Jason, let's get in touch.
Yep.
Okay, I sent you my email. Okay. Thanks, everybody.
Thank you. Thank you,
Okay.
Arden. So gents, I knew about the Arden wanting to leave early. That's why I pushed on the questions. Like I said, I'm still going to be able to do my bit a little later. But Jason, in continuing with a couple of more questions on the chat, are solar winds cheaper than hydro in Canada and the US? That's from Victor Lee. Are solar and wind cheaper than hydro in Canada and the US? Would you have any inputs on that?
I mean, I think it depends, and obviously solar and wind only operate when the sun is shining and the wind is blowing. And as a Bitcoin miner, that's troublesome. And hydro, like it's kind of what Arden was mentioning, where it's like it's not that simple as this source of electricity and that is good or this is bad. It's really, you have to look at a mix of or this is cheap or this is expensive, because there's a whole bunch of hidden costs that aren't really talked about a lot. And also just like longevity. So it's not just about the dollar per kilowatt hour, it's like setup costs and renewables. And as a company, what do you have access to? Or are you just mining hydro, or do you have a mix? Are you doing any behind the fence, like private generation or electricity usage? So it's hard just to say yes or no to that question. Unfortunately, it really depends. And even in a single jurisdiction with a single type of generation, the prices can be vastly different.
Okay, Linda, go ahead with your remaining questions. I seem to be asking on your behalf, but you're on now. Thank you.
Okay, thank you, Allwyn. Yeah, I think you've answered some of my questions. I'm just wondering, like, how do you create value? And I think you pretty much answered it. It seems like there's a variety of, in terms of, enterprise value, there seems to be a variety of, you have to be, a low-cost operator in addition to, as you said, have the average cost of Bitcoin be smaller than buying it on the market. I don't know if there's anything else you can add to that. And then I had another question as well.
Yeah, and I think there's, those are certainly the fundamentals. And then there's like above that too. So having an asset on your balance sheet just sit there may not be like the most efficient way, right? It'd be like, it's exactly why these companies like Tesla, for instance, sitting on a bunch of cash, being like, okay, what can we do with it? And then they bought a bunch of Bitcoin. So it's similar for us. And I know that we're thinking about like, okay, well, like the HODL strategy is working out. We've recently announced some interest with Galaxy as well, where we basically like stake our Bitcoin for a 4% rate of return, which is a way that we can still hold on to the underlying asset, but put it to work a little bit. And I think there's a whole side of the business with Ethereum and decentralized finance and liquidity pool and a bunch of services that are emerging that will add value. But other than that's kind of outside of the scope of mining, that's kind of more on the financial treasury management. But in terms of mining, it's like, all right, let's make sure we have efficient hardware, that's we're turning over, kind of retiring our oldest equipment, buying new equipment at affordable rates that we think makes sense based on where we see maybe Bitcoin going. And then maintaining operational uptime, expansion, ensuring that that's like the most, that we're signing good PPAs, like power purchase agreements that are with like really good producers that are in it for a long term. And yeah, because as a kind of institutional size miner, you need to make good decisions about who your partners are, because it could really unravel quickly if people don't have the good intentions going forward.
Wow, that's fascinating. That really speaks to the long-term strategy. I mean, it's not just all about managing this equipment. It's all about the treasury services side as well. I have just one other question. What do you tell people that always bring up this, bring up the objection to just blockchain, just that it's not green? Like, what do you tell people?
Well, it's another one of these things that's more complicated than what it looks like. Like certainly proof of work and all blockchains, just like all computers and internet and everything that we use as humans, they use electricity. So one could argue that they don't see the value in Bitcoin mining specifically, or the cost of Bitcoin mining. But also keep in mind that the overall footprint, like it's fairly easy to measure because you can go to the internet and look at the hash rate and then kind of figure out or estimate what the overall energy usage is. But then looking at like worldwide energy, what percentage is Bitcoin versus a lot of things, it's almost equivalent to like if you've heard of vampire power, where people leave their iPhone and computer chargers plugged in all the time. Like the whole Bitcoin network, Bitcoin mining network, is basically equivalent to everyone in the US leaving these little adapters and plugs plugged in all the time. And what value is that? How green is that? But more importantly, from a business perspective, the cost of electricity, not only just the dollar per kilowatt, but the overall cost, like the setup, the takedown, the environmental costs, all those are really day in and day out a huge headline for every mining operation. Like we're super focused on what our costs are, how we're going to improve it, both big S, capital S sustainability and lowercase s sustainability, where it's, is this a good partner? Do we see benefits in continuing down this way, or is there something else we want to make a change? And I think that's an interesting part of mining operation, because we do have an interesting use case where we can use a decent amount of electricity, but we can also control that very easily. So this is a fairly common use case in West Texas, where they basically like shut off miners and only mine while they're waiting to sell power back to the grid. So the ability for cryptocurrency miners to really like spin down and curtail their electricity usage is interesting, where it's actually very helpful to a grid where they can maintain stable levels, and if need be, they can request miners they can pay miners to shut off mining. There's a lot going in there, but and also one of the reasons Alberta continues to be a really great jurisdiction for Hut 8 is because it's a private energy market. So we can actually take advantage of renewable energy credits and actually hold and own RECs based on our own usage. Whereas in regulated markets like Quebec, even though it is hydro, individual companies don't actually earn renewable credits. It all goes to the utility provider. So I think that's another very strategic thing available in Alberta, just because we can participate in wind projects and buy renewables and sell renewables. And there's this whole aspect of the business where we're can be very attuned to the market prices and the availability of energy and the price of energy, as well as the offsets. So it's a pretty dynamic industry, besides just like the Bitcoin price going like very volatile. But
Fascinating. Thank you.
Thank you. Victor, I'll let you go with your questions next. Linda, I'm thinking you're okay, right? Yeah. Okay, Victor, go ahead.
Everyone, can you hear me?
We can hear you a little louder, Victor.
Okay, can you hear me now?
Yes.
Okay, great. Hi, Jason. Thank you for coming to speak to us. I appreciate. My question is, since Elon Musk tweet about this Bitcoin energy usage, has your shareholder or board of director has any, asked you to do anything, or do you feel any pressure to use more renewable energy? By the way, what percentage your energy use are renewable?
So for some of our sites, we use, for Drumheller, we're on the grid, so it's a mix. So it's hard to, like, basically you could look up the Alberta mix and that's kind of the percentage of renewables. So it's, but like we are continuing our strategy of developing renewables because of just a critical part of our business. And that was prior to anything from Elon Musk. At the end of April, we announced a head of sustainability and energy, Ronnie Yu, who used to work for, who's a director at Bullfrog Energy and has a really great understanding of the Alberta, not only Alberta, but Canadian and US markets. And he's also based in Calgary. And yeah, so it's kind of part of our strategy now that we have a whole new management team. Maybe I'll just bring that up for a second. So our CEO, Jamie Leverton, started at the beginning of December. I was brought on in February. Our head of operations was just a month before Jamie started in October, end of October. Our general counsel was also February of this year. Our CFO started at the end of, a new CFO at the end of April, and head of sustainability at the end of April. So like that's it. That's the leadership team. So we're a very new company from a leadership perspective. And since day one, we've been evaluating where we want to be as a company and bringing people on board to help fulfill that and help kind of steer Hut 8 into a way that we feel is both sustainable from a corporate perspective, but also what's best for the company for energy usage and how do we show value that to our shareholders. So yeah, and you mentioned Elon Musk. Our CEO, Jamie Leverton, is also on the Bitcoin mining committee that had a meeting with Elon Musk and Michael Saylor to discuss, to kind of help broaden and show perspective of what Bitcoin miners, especially in North America, the initiatives that are important to us and how we see it, and what our plans are. I mean, there's no question that Elon Musk is like brilliant in what he does, but it also seems that he doesn't quite understand the mining ecosystem, and like he's educating himself as he's like disrupting markets. So I think it's a very fast way to educate oneself, but yeah, we're also there to support each other and to help educate as well.
And
so
now,
Yeah, go ahead, Victor.
thank you.
Okay. Yeah, go ahead.
I know a large institutional investor like BlackRock and others now have the increasingly push for the ESG mandate for some portfolio, like some maybe a mutual fund or a stock portfolio. They may say, okay, for your stock to be included in our portfolio, you have to use a certain amount of renewable energy or something like that. Has that kind of discussion come up from your investor or anything like that?
I'm sure it has. Like I think there's a bunch of conversations happening that, I mean, I'm head of technology, so I kind of stick to my lane and let other people do their thing. So but I think it's reasonable to assume that a lot of different investment portfolios are looking at crypto and evaluating which fund it will fit into, and if there is an ESG focused fund, what crypto companies could fit into that, or what are the requirements? Because I think ESG as a kind of a standard is still not really tight. Like you can, it's largely done based on like accounting, and it's tricky to really have like a universal standard of what is ESG. Because growing up in Alberta, I know that oil and gas industry in Alberta is far and away super responsible for ESGs and very, very clean as you can kind of go to. And still there's problems. And it kind of it really got a bad reputation and wasn't able to separate or differentiate itself from general oil and gas practices. And yeah, I mean, ESG funds are going to be ESG funds, and there's value there. But I think I've also read like articles about ESG funds missing out on a lot of profits from oil and gas and energy industries because they're excluding them from their portfolio. So I think it's just like, again, what's right for the investor, what's right for the fund, and it's not necessarily about profit maximizing. I think it's about beliefs and values as well. So we'll see where we go, but I know that ESG and sustainability is important for Hut 8, and you'll likely be seeing more communication and more information about that going forward from us.
Thank you, Jason.
Thank you, Victor. Okay, I'm going to take over and do my bit for the next 10 or 20 minutes, and then back to you, Mike, so that any more questions to Jason can be directed there. So I'm going to hit share screen, and just give me a second now. I am nearly there. Okay. Okay, so this is more about me and a presentation. I hope all of you can see that meetup presentation, Bitcoin mining, a mindset. I'm going to go quickly through all the slides, and for any of you who want to refer to this later, we'll add the video that we've recorded today with Jason and Arden and all of this discussion to this website. It's called mining.bitcoin101.ca. You can go there right now and see this content that I'm going to be presenting. We shall add the video to it after the presentation. So I used to be a miner, like Jason mentioned, way back in 2013. I was a hobby miner. I never graduated to being a professional. I am now head of research at Bitcoin Bay. But just to take on for some of you who've come in for this presentation from a more layperson's perspective, other than thank you, Jason and Arden, for those wonderful inputs that we've got. So this used to be my mining equipment, the one on the left, and you've probably seen other mining equipment like the ant miners, and these used to be the ASIC hardware that I used to use way back. I have put in links wherein you can go there and look back in time, some of these different types of hardware that are available, but some of this may be outdated. If any of you do want to consider hobby mining or starting something on your own, you may have to actually go on to the site of Bitmain to check out what are the prices for the latest equipment, etc., and also have a look at what terahashes and power consumption they would want to give you. Looking back here, this is 14 terahashes, the S9, and we're looking at the S19 over here. Of course, in terms of pricing, you can also have a look at the various amounts that people have quoted on these websites. Now, I'm not saying they're accurate, but it's a good way to start off yourself and get an idea as to what is happening. Continuing with the presentation, just a second, guys. Where am I? Just a second. I go back. Okay. So here we are. There are other websites which give you ideas about mining Litecoin and other things, but as part of a history, I have also added, so these are the various GPU cards, etc., that used to be used in Litecoin mining. Of course, now you have more specific ASICs that do Litecoin mining also. So that, as far as I remember, Jason mentioning, you can choose your coin and then look at what is available. Saya Coin, etc., have got specific hardware. You have to Google your way and then make decisions. For those of you who've never understood what mining is, later parts of this presentation explain specifically what a hash is and everything. But as far as the history goes, yes, we have the first generation of miners were CPUs. Bitcoin used to be mined for over a year, I believe, by Satoshi on his CPU, and he has over 1 million Bitcoin in there. Then we have GPUs, and we have the FPGAs. FPGAs are basically field programming graphic arrays. These are basically hardware that can be programmed later to mine specific types of coins. Of course, from there, everything moved on to ASICs, and the ASIC race began. And then you have smaller and smaller nanometer chips that basically were able to be fitted onto circuits, and you ended up with more and more hashing power, etc. So this is as far as the history of it goes. Again, I'm going to go through it a little quickly because the content is there for anybody to refer to from a perspective of a beginner or somebody who wants. Now, along with what Arden and Hut Mining have brought into the picture, if you go to some of these websites, you can see there's cloud hashing where you can pay companies, but I believe that this particular one is closed down. Then there are other companies that provide different ways of doing things. Allied Control is a Hong Kong based immersion cooling and Bitcoin mining company. It was acquired by Bitfury. So there are a lot of references to various situations that you can go through. I have put on this website just for you to get an idea and a mindset as to what are the possibilities, along with Canada and everything else that you've heard in this presentation. Also, for those of you who are new to mining and wish to try it out, way back in time, we used to have to join mining pools. I was onto Coinotron, and I mined a bunch of Dogecoin and a bunch of Peercoin and Litecoin. But Coinotron's closed, so you can look at some mining pools using the wiki link or your own. There are hundreds of different pools. If you choose to start mining, it's tough. Not for the faint of heart, and it's definitely not in the scale that Jason and Arden were discussing. But again, like I said, back in the day, that's one of the ways I went in. So for example, if you want to look at Saya coin mining pools on the official Saya website, they mention F2 pool and various other pools, and you can try those out. But if you actually go to the F2 pool website, you'll find that they have not just Saya coin, but a whole bunch of other coins that they have various recommendations and hash rates and prices that are there. Mining pool comparisons, I've put in a link there. I'm not saying this is the latest up to date, but for those of you who are mining, you may want to explore some of these links to be able to see where it is ideal to join. One of the things I did realize when I mined is, Coinotron did the job. Just let your stuff be. Trying to explore and jump around too much gets a little tricky. Profitability can be calculated using sites like CoinWars, CoinWarz. You have to choose what kind of equipment you have and what kind of electricity and etc. And then they will actually just give you the best coins to mine. That's how it happened back in the day. This is the CoinWars website. What I'm going to try to do along with Bitcoin based blessings is maybe Saturday morning, 8 o'clock, while we stream out to Dubai and Mumbai and the other side of the world. I'll probably have a real-time hardware demonstration of how to configure and look through all these sites and decide various things. But let's continue now with what I've got on mining.bitcoin101.ca as a reference and a mindset for all of you. So there's the other place that you can go, like Nice Hash, and if you've got a good system with GPU cards or something, they have auto detect and various options, which I found exciting, and I'm going to probably try that because I have a good mining a good laptop with GPU that I never really got down to mining. When I got it 3 years ago, I did a little bit of Aeon mining, and then I didn't mine, but I might try this out as an option. For those of you who do not understand, and like Jason was trying, what is mining? We've had presentations before that explain it, and the site bitcoin101.ca was one of the presentations. I have those links in my latest slides, but if those of you who've never understood it, let's assume that you understand how Bitcoin works, how it was that way back in time. Let's say Satoshi, Hal, and Gavin got together and decided to download the software which was from the GitHub and got themselves to be nodes, and then someone had to add mining power to this whole equation, and so proof of work and mining began. It's actually the 9th of Jan. I found out it's not 3rd Jan, just letting you know. Again, a blockchain, how it looks like, the current reward 6.25, the size of the Bitcoin blockchain, etc. We've been repeatedly going through these kind of slides. And so again, a reference. I do have an entire presentation that is mentioned at the end here in terms of how this works. So today we may not be able to get into the details of blockchain, but mining explained is something that starts off by understanding what a hash function is. So a hash function is nothing but me telling you, take a calculator, take the square root of 3 and give me the output from the 5th to the 10th digit after the decimal place. You'll say, that sounds funny. Why am I going to do that? So I say, okay, now take the next prime number and do it, and take the next prime number. So why would I do that? Say, okay, I want you to get me that input, that prime number, that when you take the square root of it from the 5th to the 10th decimal place, I want the output to be 512754. You'll say, why would I do that? So I give you 50 Bitcoins. Okay, so 3, 5, 7, 9, 11, 13. So basically a hash function is nothing but taking an input through a process to get an output which is not reversible. And when you look at Bitcoin, it uses the SHA, Secure Hashing Algorithm 256, which if you look at this calculator, you can put any random nonsense through SHA-256, and what you get is a hash which needs to have, as per the program, so many leading zeros, and that is the difficulty that the whole network puts in. So if a hash function that I showed you earlier is simpler this way, Bitcoin mining involves the SHA-256 hash function, and that can be done by you manually, but of course that's what these machines do. They randomly throw nonsense through SHA-256 to be able to get an output that should match a certain difficulty that's been put in by the blockchain. So again, if one is able to reach that input that has to be put in to get the output, the winner gets 6.25 Bitcoin. So every 2 weeks, that difficulty is recalculated. And this network, the Bitcoin network, it surpassed 10 times that of Google in 2013. Today, it's impossible. Something that has the most computing power on the planet, and it's kind of impossible to break. But for those of you who never understood what hash function is and what mining actually is, over here I have tried to explain it in detail. Again, repeatedly, those of you who've been listening to the same thing again and again and referring to this are eventually able to grasp it and are able to get it and say, okay, now I understood what mining is. And then when we scale it up all the way to what the two gentlemen brought here today, it's a completely different dimension. So that's as far as how mining works, what a hash function is. Bringing in Elon Musk's Dogecoin and various other things, I have links to it, but the additional factors that come in are the fact that they are script mining coins. They use a slightly different technology. You can refer to the links as to what is script and the details that go along with it. But other than that, and the fact that they have something where they do a difficulty recalculation on every block using the DigiShield algorithm, it's very similar to Bitcoin because Dogecoin, etc. But of course, then you have Ethereum and Ethereum's various functionalities that have been brought in. Again, today I will skip going into it too much in detail, but if anyone wants to have a more deeper discussion, you're welcome to throw questions at me after this, or come on Saturday, 8 o'clock in the morning when we have this being presented to Dubai and Mumbai, we'll have more time. Finally, before I conclude about staking, I'd like to point you to the last two slides in this presentation. The first one is bitcoin101.ca. It's the original website with much of these slides overlapping, but for those of you who are completely new to Bitcoin and the gentleman who was talking about our recommendations as to why we prefer people to go through cash, etc., this is the video talking about wallets, exchanges, etc. And the mindset when you are actually choosing coins, etc., is on exchanges.bitcoin101.ca. Now, going back, there are some of you who say, okay, I don't want to mine, I want to stake. And I've had those questions coming at me about Cardano, etc. You need to understand that proof of work and proof of stake are two different things, and Ethereum being proof of work is moving to proof of stake, but various other coins like Polkadot, Cardano have got different methods of staking, and there are different ways in which these validators and nodes, etc., can be spun up. So that's not really mining the way we have been discussing today. But if you have layer one scaling and you've got Polkadot and Cardano and Elrond on your mind and you want to get into staking, I've put in this slide for reference. With that, I come to the end of today's presentation from my side. I'd like to throw this back to you, Mike, so that if there are any specific questions from people to me or want some more in-depth discussions, because I think we've got a varied amount of people here. Thank you, Linda and Victor, for all those questions. Over to Jason, but now we may want to ask more questions to him or some more basic questions to me. So I'll pass you over to Mike, and then let's take it from here. Over to you, Mike.
Okie dokie. So let's open the floor up. Basically, does anybody have any more questions? Does anybody have any sort of things that they're curious about that we can help out with?
Okay, so if there's nobody throwing in a, oh, Victor's got a question. So let's go over to you, Victor, first, and then whoever else wants to, and then I'll answer a few I saw here about stuff. But Victor, over to you.
Thank you, Allwyn. I thank Mike for moderate the discussion. I've been thinking a lot about this mining energy use issue. There's no doubt that Bitcoin securities depend on energy. You can think about it's a wall of energy that secure, like a secure castle. That in this case is the wall of energy secured. The question is there's any alternative to make the energy more productive? For example, long time ago, the community, there's some research thinking about maybe instead of brute force a number in mining, maybe we can try to use that energy to solve a puzzle like a DNA protein folding. Or in one example that a few years ago I remember read up in the article is that one of the Bitcoin miner sell the heat he produced from the mining equipment to a greenhouse, so that use the heat to warm up the greenhouse. So in that case, it's still a very productive use. It's not waste. Remember, energy never disappear. Energy just transforms from one form of energy to another form of energy. So in the Bitcoin mining, some of the energy was converted into heat. So if we can use the heat to some productive use, that would be good for the industry. Yeah, just a thought. Thank you.
Thank you, Victor, for that. Yes, and in fact, I think there are a couple of Canadian solutions which are trying to do that on a building level. I'll have to dig that out. I think Edward pointed me out to somebody who was doing that. But thank you, Victor. I'll also take one question here that was asked about what happens when all the Bitcoins are mined. Unless Jason also wants to put his input, because that question gets asked very regularly. I think if I was to answer that from my perspective, everyone who answers it has their own. I would think they might come out with a soft fork if Bitcoin still remains on proof of work. That'll increase the number of decimals from 8 to more, and mining and Bitcoin and everything else will no longer be there. It'll be Satoshis that you're going to be collecting. All those who collected Bitcoins in the past will be the lucky ones. Some might. There's been Bitcoin loss, so don't expect everyone to stay alive. Jason mentioned how we used to lose our keys and stuff. So that is in the past, but as long as the network continues to bring value, and once Satoshi reaches $1, then if there are further decimals to be added, this is my thinking, it might just continue to bring value as the network gets stronger and more powerful. But there are other ways and other people's perspectives when it is said as to what will happen when all the Bitcoin gets mined. But I still think that's way in the future. I think from what I remember last, it's somewhere about more than 70 to 100 years ahead. So that's my take on that question. Over to you, Mike. If there's any questions there that you wanna direct to anybody or Antoine.
Let's look over the chat here. Jason, you're still with us, aren't you?
Yeah, I'm here.
All right. So actually, with what Allwyn just asked there or answered, do you have anything you want to add on there when all the Bitcoins are mined? What happens to your organization, or how do you think the network would actually work in that sort of scenario?
Yeah, so I guess it's kind of like this. So there's two things, right? There's block reward and there's transaction fees. And so right now the block reward is 6.25, and associated with that are transaction fees that go into every block. So right now transaction fees are like a 0.3 typically per block. So it's quite smaller. But in the future, like it's all kind of an economic question also, is about how valuable is the Bitcoin network, how valuable is Bitcoin, and then what's the cost of securing it. So right now, every 24 hours, let me just look up something here. There's roughly $35 million paid to secure the network in the form of mining. So, and that's quite low, actually. It was quite a bit higher a couple weeks ago. But so basically, right now, $35 million are being paid out to miners to secure the network. And the vast majority of that is from the block reward. So as block rewards half every approximately 4 years, miners have to reevaluate the economics of it. And then that number is going down. Like there's not going to really be a scenario where that number increases. It's going to continue to go down. So really the long-term view of Bitcoin mining is that it will be self-sustaining based on the transaction fees alone. So as Bitcoin increases in value, it's used more, maybe there's more fees associated with it. then, and that's probably where mining will end up. But I mean, really, it's a community project. So just like Allwyn was talking, if there is a fork that's supported, like that's something that's also really exciting about blockchain, where if there's a large enough group of people, they can make decisions and change the network to suit their needs. And then it comes its own like economic kind of ecosystem. So yeah, like really anything's possible, really. But I think it's largely the transaction fees that will help support it.
So I've got a question that follows up with something that was asked earlier. You know, somebody said somewhere about a comment in the chat about, oh, 90% of all the Bitcoin ever mined. Well, let's ask another question about centralization with chip fabrication. Here's one example. Ford can't make cars right now because of one shutdown in Taiwan. So where do you source chips? How do you source it? Is it completely centralized? Let me know about that.
Well, there's certainly the supply chain for fabricating chips is certainly crunched. One of the biggest reasons why Ford and General Motors don't have chips to build cars is because they actually, last year after the pandemic hit, they pulled their orders. So they basically got out of the queue. And so then they bought back in the queue, and they basically like kind of at the back of the line. And so there's only so many of these chip foundries around the world, the main ones being TSMC, and Samsung is a huge one, as well as now, well, Intel. And an exciting thing about Intel is like they're changing their strategy, and they're becoming a foundry, like a third-party foundry. So they're going to be manufacturing chips, some in the US, as well as their other foundries, to increase the kind of production capacity of chips. Now, that going said, I ordered 2 laptops 3 months ago for some new employees that started, and I haven't received them yet because there's no supply. So like there's a chip shortage. It's the only, people are saying it's a chip shortage, but really it's just like a bottleneck. These foundries are not producing enough to make demands, and that business is like has huge capital expenses to get up and running. We're talking like billions and billions and billions of dollars to build new fabrication facilities, and so we're just kind of in that wave. And at the bottom of the heap are crypto miners. So like Bitmain, MicroBT, Bitfury, a bunch of third parties. They're like a small fraction of the chip purchasers. So they just don't have the buying power that has. So there's certainly constraints on new ASIC hardware. There's constraints on new GPUs, and I think that's one of the reasons why a year ago you could buy an ASIC for $1,700, and now that same ASIC is worth $12,000, $15,000. Like that's not only is the price of Bitcoin and crypto increased, but just the availability of these on market is quite low.
So the other question I have around centralization as well is, I know a couple months ago we had a power outage in Xinjiang, and it actually took out a good chunk of the mining power on the Bitcoin network. How do people or organizations like yourselves in other parts of the world sort of keep up with sort of that firepower that's being provided in places where the fabrication is so local? So what do you guys do to stay competitive in that sort of area?
So that actually helped us quite a bit when they went off the network, right? So, I mean, there's certainly like the major growth in hash rate for cryptocurrency in general, the biggest growth has come from North American miners. And I think that's as people and companies and banks and all sorts of things become more familiar with crypto, they're more open to supporting it and to funding it. And like we're still kind of at the mercy of the hardware providers from the Asian manufacturers. But I think there's starting to be a market that's developing, and I wouldn't be like look at all these S&P 500 companies buying crypto to hold on their balance sheet. Like, I don't think it's going to be too long before you start hearing about Intel and some of these OEMs who have a huge buying power for these chips to start looking at manufacturing some hardware for cryptocurrency. So I wouldn't be surprised if they start looking at that and you start seeing it. I mean, this thing also take time. So we're basically looking at like a 3 to 5 year time horizon. But I think you're going to start seeing like ASIC or crypto specific hardware from these OEMs.
I have a question, Mike.
Go ahead, Linda.
So Jason, I think somewhere around 60% of all mining happens in China, I believe. And I know just recently, miners in China were told that it is illegal to be mining Bitcoin, or I'm wondering what is the implication? What are the implications of that? And I guess, and how has that impacted your business?
So, I mean, I'm getting a lot of inbound calls for hosting from miners all over the world, but particularly Asia. But at Hut 8, we primarily self-mine. So we have a small hosting of 9 megawatts, but we self-mine. So like because of the nature of Bitcoin, like when miners shut down or exit the system, the difficulty over time drops. And like us as North American miners, we just stay the path. We're actually becoming more profitable as like if that actually goes through and doesn't, and the government of China doesn't change their mind like they did in 2018 again, and kind of give crypto mining a green light, like every other miner will become more profitable, just based on the shift of hash rate and power. So like we'd be better, like more individual profitable if when miners exit, and especially at that magnitude.
So I got another question. What about forks? So I'm thinking Bitcoin SV, Bitcoin Cash. How does that play into your business plans versus Bitcoin?
Well, I guess it has to kind of be evaluated at the opportune time. Like I know there's some other crypto assets that use the same algorithm, right? Like we could essentially use our existing ASIC fleet and mine like BSV or some other SHA-256 based algorithm, but then like why? What's the economics? And a lot of the forks are maybe like dogmatic or get down to a certain feature or the block size or a variety of things. And so I haven't had to deal with any of those things personally, but I think how we would evaluate it is try to understand the underlying reasons for the fork, and then where the ultimate value, where we see the biggest value maintaining, and which is why we've primarily mined Bitcoin, where we've exclusively mined Bitcoin, and then at the end of the summer, we'll have a small GPU mining capability.
So I'm just seeing some stuff that's being asked here in the question or being stated in the chats here. CPU mineable coins. Let's take into account of, I know it's not something maybe you focus on directly, but are they worth mining? I'm thinking the Moneros, stuff like that, random X type coins.
Yeah, I mean, this is like everyone has their own evaluation criteria, and that's kind of, especially where supporting a project, like a blockchain project, you support it with your CPU or your whatever resources. There's some blockchain networks where you'd actually support it by providing storage, right? So I think this is one of the interesting things where you are like, okay, there's the exact real-time economics of, okay, I earn this much based on allocating my computer resources, whether that's CPU, GPU, or specialized hardware. And that's like a real-time economics. There's also the like early adopter, where if I'm an early adopter, given the example of Bitcoin, and started mining in 2010, like I would be unfairly compensated based on today's prices, because it would cost me $1 per Bitcoin to mine it. But because I was an early adopter, now I'm unfairly compensated because I contributed early on. So like, I think this is one of the, again, the really cool things about blockchain and this space is that if you're involved in a lot of projects early on, or you give resources and you become a proponent of that community, it can be very rewarding in not only community building, but also like economically as well. So like, yeah, go for it.
Perfect. Okay, so let's open it up. Are you still good for time right now, or do you have anywhere to go to there, Jason?
No, I'm good. I'm good for probably another 10 or 15 minutes. So.
All right, let's see here. So anybody else want to say anything right now? Please feel free.
I have another question. My understanding is that it is very, very, very difficult to be a miner today. You really need to be in a business like Jason's to really make any money. I'm just wondering if you could comment on that, and maybe Allwyn as well.
So the question to you, Jason, in turn would be, what are you looking for in GPU mining? Because I had the experience way back in the past, and I know of people that I set up equipment from Canada Computers with these GPUs and stuff, and they were mining Doge. And Doge never went up for the longest time. I sold all the Doge I mined, and this guy got upset with me. And then suddenly the whole price of Doge went up, and he went back in time, and he had a million Doge. So so he was happy. I was sad, but I had other advantages. But he didn't stay in the market. So I don't think that those opportunities may be back again. But if you even ask Mike here, I know he's into some coins, so you can CPU mine and GPU mine a bunch of coins. I've tried Saya coin, etc. And recently, in the last 2 or 3 years, I haven't mined. I'm going to be honest with you, and it's just for this meetup that I might resurrect some of the things. So the question to you, Jason, would be, when you say GPU mining, where are you headed in that sense? It's definitely not Bitcoin, but a thought. I don't need to know something you don't need to tell us, but if you were to give us a thinking from your perspective.
Sure. So like planting trees, the best time to mine was yesterday, like a year ago, 10 years ago. Like it's difficult to start mining in like a bull market phase because the price of hardware is so high. And so for you to start off, like it's harder to get into it. So if you were to like buy hardware, you're probably looking at, for like a simple GPU rig, like probably in the 12 to $15,000, and that in order for you to actually make returns on that, either the asset that you're mining has to basically go up, or you have to hold it for a very long time, or something, like a variety of things. So it's like, because of the constraints and the prices of hardware, I would say it's the economics are not super favorable to start. And especially at small scale, it's more difficult. Whereas at a large scale, you can leverage your buying power. You get a lower price, like volume pricing, that sort of thing. And so that's really where it helps to be large. And in terms of the other question, like what are we mining? Like GPUs are also allow you flexibility that you can move in between networks. Like I think what we've announced publicly is that we'll be mining Ethereum, and until it's no longer economical to mine Ethereum, and then we'll look at alternative networks and variety of options. But like that's kind of the beauty with GPUs, is that flexibility. So like we're kind of in the business of converting compute or electricity to digital assets. And so for our GPU fleet, we'll be largely looking at what's most profitable. We won't hold on to, like, yeah, I think that's basically our strategy, where we'd be mining whatever is profitable.
Thank you. Thank you. I could add to that, Linda, is that it changes, and those websites I mentioned on the site I've put up at mining.bitcoin101.ca, some of those sites, they allow you to know what's most profitable, and they switch you between one and the other coin, etc. So I didn't do that myself, but using Coin Wars and Coin Police, I would do the calculations and the math, and then, you know what, eventually I found sometimes it's best to stick to mining one thing and continuously in the same pool, because if you can trust that pool is being genuine enough to give you what they say they give you, and it just keeps coming continuously, then it kind of makes more sense. But definitely not profits in those days. It's all in retrospect that you look back and say, oh, 2000 Doge a day wasn't bad, or 5 Ethereum a day wasn't bad. But then, have you held on to it? When did you sell? And over the years, did you know this was going to be 1 Ethereum at $5,000? I didn't know. So I don't have exact answers to the whole thing, and that's why I say it's all about a mindset. And I see where Jason and Arden and everybody else have their own problems. Let me tell you, I always start by saying Bitcoin and Bitcoin mining is not for the faint of heart, because although it was that, oh, I'll buy the hardware and I'll mine, and if the price goes down, I'll sell the hardware. It doesn't work that way. The kind of stuff, other than what Jason and Arden were talking about, I had moved to a place in Toronto where in 2014, I was on the mezzanine floor, and that particular year it rained so heavily in that July month that it went through records of 50 years ago. It didn't rain so much. On my mezzanine floor, I was flooded. Lucky for me, my equipment didn't get flooded, but floods and temperature and everything, and then you're blowing up the fuses. And so it's a very complicated thing to say that you're going to start mining or do Bitcoin in the first place, and mining has multiple layers of problems. So there are some ways you can do things, but I think those have gone past. I mean, in those days, I even actually bought some cards, mined for 2 weeks, and returned the cards. I had 200 Litecoin. I remember. I don't recommend that being done now, because I think the Best Buy and all these companies have gotten smarter over it. But I wonder if you take a laptop with a good mining card and mine for 2 weeks and then return it, what exactly the situation would be. I'm not recommending that, but hey, just saying, right? So yeah, over to you, Mike, or anybody else. Any more questions?
I have a question, Allwyn.
Go
Can you
ahead.
hear me?
Go ahead.
Yes. Maybe this question probably more for Jason. As we know that the Ethereum is going to move from proof of work to proof of stake maybe next year. Do you know among Ethereum miner, are they thinking about, you know, they're going to stay with this chain and so that they can continue to mine? Is there enough consensus among Ether miner that they will stay with its original chain, not move to so that they can keep the proof of work Ethereum going?
So unlike a fork, what's happening with Ethereum 2.0 is basically proof of stake Ethereum is subsuming proof of work Ethereum. So there won't be mining on Ethereum going forward at all. And approximately, I think Ethereum is about 90% of the GPU mining market. So then there'll be lots of GPUs looking for other networks to mine. What I think, like they may, depending on the individual miner, they may stick with it, like assuming they want to become a validator or they want to stake their Ethereum. And this is one of these like fundamental things that I find really interesting about why Ethereum is moving to 2.0, because they're basically taking something like a community of people who are super dedicated. They go out and buy GPUs, they run their rigs at home. They've seen Ethereum through highs and lows and kind of invested more, expanded their operation or sold or whatever. And so they're taking that environment where it's very distributed, decentralized, right? And anyone can kind of get in at various cost thresholds, to something that's much more centralized in terms of, if you're a validator, you have to run basically a server, and if your server is not behaving correctly, you actually lose money, you lose value, you will be slashed. And not only that, but you have to, the only way to become a validator is to have 32 ETH. So like, how many people with 32 ETH who used to be miners could also run like server infrastructure? It just seems like they're moving away from this really kind of community driven security layer into something that's basically centralized into Microsoft Azure, AWS, that sort of infrastructure. So like, yeah, it really, and like those two skill sets are not too much aligned. Like, I don't really know a lot of miners who are also DevOps experts who can run servers and services and have, can run nodes and it's like different skill sets, certainly. So I have a tendency to give verbose answers, but I hope that kind of frames or it kind of answers your question and gives a bit of context about how what I'm thinking and sort of the nuances with Ethereum 2.0.
Thanks, Jason.
Thanks, Victor.
Well, if that's everything, I think, we can end this off tonight. So thank you everybody for coming out tonight. And we can end this now, unless somebody else, one last question, and then we can end it off.
Hello.
There we go. Leon, go ahead.
Yeah, I'm a bit late to the fray. So what's your position on using Bitcoin mining for, let's call it advantageous or arbitrary trading energy behind the meter for a renewables project? I'm sure you've seen these kind of scenarios. The white paper that was done by Square and others. So just wanted to know your opinion on that.
Well, I think it's certainly interesting. Yeah, it's certainly interesting, and it's one of the dynamic things about mining is where you can shut off your miners, you can redistribute that power, you can set up your miners behind basically any sort of power gen, and it's I'm just Hut 8 is a publicly traded company, so I do have to not really I can only disclose what's publicly there. But I mean, this is kind of the really interesting part is like the flexibility is there, where given the opportunity, if it makes sense economically, there's a business case for it. And like miners can be very flexible, especially with mobile containers, and all you need is an internet connection and power.
Yeah, so I guess we're a bit of a sleeper in this kind of motion. We've scaled up to build 27, now 28 solar parks in Australia. We've had some of our deep tech team in Canada, but now we've found some money to actually get to scale. And so we plan to do a little bit of Bitcoin mining behind the meter, but certainly not at the capacity of the farm, just enough to take some of the peaks and valleys away and to hold back energy with the grid scale battery. Also, in South Australia, the grid prices go negative a few times a month as well. So it would be quite advantageous to do that, to, you know, even at night, suck up some extra wind energy at a -$1 or $2 kind of tariff, and then be able to mine at night, you know, on a megawatt load or something like that. So
yeah, I think that's a great example. And like, you know, that's just take it all the way to the future, where every single appliance basically has some sort of mining capability to secure the future financial system, and it takes use of prices, and it allows the grid to be like very, very stable, and each individual can store power in their house, they can use power in their house, they can sell their power. I mean, these are some of the really interesting things about blockchain and collateralized assets or not collateralized assets is you can transfer these things. So it's pretty cool.
yeah, that's the kind of infrastructure we're trying to build at scale now. So we've got the finance to try and finally do this. And so I guess later on this week, you might see some press releases from Sonified to try and do that. But I thought you might have an opinion about renewables. Not that you can do much solar in Canada, especially in Ontario. They've killed the feed-in tariffs and some things like that. So
yeah, luckily we're in Alberta, but
I know that.
Yeah. But no, great question. I think it's a dynamic space, and with technology we can, and energy markets and all those things, they kind of really tie in nicely together. And I think there's a lot of synergies there, for lack of a better word. But
Thanks, Jason.
Yeah.
All right, guys. So thank you so much for coming out tonight. Jason, Arden, everybody has been wonderful contributors tonight. Thank you so much to everybody in our meetup group who came out tonight. It was amazing to have you out, asking so many questions and being so engaged. So I think it's a good time to end it off. And, you know, I've got to go and check and see if the Maple Leafs are losing right now. So let's have a great night, everybody. Have a good night.
Thanks, everyone. Take care.
Thank you.